evening. Het. Het. Oh, hey. Okay. Thought you was talking about like a hit vehicle in the military. Like, what you know about that? Another great evening here in Columbus, Georgia. Another great evening. How are you? How are you doing? Miss Here to Learn and Share. What's up, King Vaughn? What's up, KC? Yo, what's up, Lewis Mitchell? It's another great evening here in Columbus, Georgia, man. Uh, all of my fatherly duties are out of the way for the evening. So I said, hey, let's jump on Al Gore's internet with the I'm gonna rent it. I'm gonna rent it tomorrow because I have been wanting to see it, but I couldn't find it nowhere, like on Amazon or nothing like that. It was like only on their website. So I'm well. Here to learn, Michelle. What's up, Michelle? How you doing, Michelle? What you doing up so late? You're gonna be tired tomorrow. Talking about, Sam, I just got to the office. I'm gonna watch this later when I get done. When I get back home. Cause I'm tired. Cause I be up late. You be going live late at nighttime now. So I be sleepy when I got to go into the office. I'm not remote working right now. What's up, one spoke coat? What's happening, one spoke coat? You got to go in tomorrow. Go to sleep. Get your butt in the bed and go to sleep. Just came in to update my charts. I don't know if I'll run my mouth too much tonight. Um, One thing I did notice today that we closed at 4 o'clock in the exact same place as we closed yesterday at 4 o'clock. Right here. It's 3 o'clock. Close your candle. Let's squanch this up. It's fine. 3 o'clock yesterday. Too far. Monday, 3. Monday at 3 p.m. Right there. That candle right there closed. See that line? 3 o'clock closed. 3 o'clock closed. We closed in the exact same place on Monday and Tuesday at the New York close. New York. What's up, Kareem? I did notice that. And the reason why that stuck out of my head was because on when was it? When was it? Was it Friday or Sunday? One day we were talking. I can't. My days run together, but we were talking, and we were saying that um, we were on a daily, and with the weekly fighting through, trying to get back on one accord with the monthly, with the NQ and the Dow having that. What's up, stock chaser? With the NQ and the Dow having all this divergence over the past year, and with the dollar acting fickle right now, we had just been consolidating, and we have been staying true to that. Remember when I was like, hey, I'm trading without a bias right now. I was like, I get it that Michael was like super bearish on everything except the dollar. Like he was bullish on the dollar, so he's bearish on everything else, which makes sense. If you're bullish on the dollar, you would be bearish on the indexes. You would especially be bearish for dollar pairs in the forex. Now, we don't always have to go down. We can just consolidate, and we spoke about um, where we were and all of the factors that I was accounting for. And thus far, we've been consolidating just as um, we talked about. We said we can hang around in this area for a while because of all the different factors that we just named. And we've been here for 1, 2, 3, 4, 5, 6. Now, to this candle is the seventh day. That's what we've done since. What's up, Larry? The biggest bear in the building. Um, this is started 6 p.m. today. But remember this morning I said I know we're only like 30 minutes into the morning. All right. But if we stick along with what we have been doing, we can hang out in this area. And then look at that. Y'all see that consequent encroachment of that wick there? Monday and Tuesday, we've stayed above it. All right. Monday and Tuesday, we've stayed above it. That's a premium wick. Right. The job of that premium wick is to keep price down. I look at wicks as sibbies and bissies. This is on the top of the weekly candle. It's a premium wick, so I look at it as a sibby. Same way I look at this sibby right here. That sibby job is to keep price down. So this wick's job is to keep price down. Now, that's 2 days in a row we've closed on the top side of it. Right? Again, that's a weekly wick. That's a weekly wick. That's the wick right there for this week here. That's a weekly wick. So the time frame that it was made on is the weekly. So all of the closure above it, below it, none of that really comes into effect until this Friday at 5 p.m. Pretty much 4 o'clock for the New York session. That last hour be kind of bleh. But sometime it be on 5. But on Friday, that last hour usually don't do much on Friday. But Monday through Thursday, that last from 4 to 5, it can get crazy. But so remember what I said. The closure above this or below this, that comes into play for the time frame the PD array was made on. Anything lower than that PD array, you can have closures above it, below it, but that it don't matter because that's just the lower time frame playing things out. Now, you can look at it as on the daily, with the daily closing above it, you can look at it as, hey, this is an indication that we may try to go for the weekly high, if the narrative lines up. Typically, when I start to see that, I'm saying, hey, we're going there. But since right now I'm trading without a bias because we're in between, we're in like this weird space because the weekly is trying to get on one accord with the monthly. The daily has gotten on one accord with the monthly, and the weekly is showing signs that it wants to. For those who have not been joining our lives and who have not stayed around through the live and caught everything that we talked about, let's go back to the top, shall we? The monthly chart. Y'all probably gonna notice verbatim with me. Y'all gonna have my analysis down pat with me. But since I know people don't like watching long videos, and I know people probably don't go back, look at it. Let's do it again. Monthly created a balanced price range. All right, we're going to use that wick right there. This wick kind of long, so we're going to use that wick on the propulsion block. Balanced price range on the monthly. What made this a balanced price range? Let's get fancy, shall we? Let's get fancy, shall we? Oh, come on, Tim. balance price range on the balance price range on the month. What makes this a balanced price range? When we left this area right here, when we left, that's what made it a balanced price range. Anytime you got a range, it can be a consolidation, it can be a range like this right here, it could be anything. But once price leaves it, it's now a balanced price range. Price left it, balanced price range. So we got a balanced price range on the monthly. We left that area, right? What do you call this when we leave this area? Right? That right there. That right there. Leaving this area. That right there. Called expansion. That right there is called expansion. Come here. Cheese and rice. That's called expansion, right? Because we consolidated and we left that range expansion. Now, this expansion in this case is also displacement, right? It's also displacement. It's also displacement. What makes it displacement? That there little bullish fair value gap. That's a sign of displacement. Right? What else does that bullish fair value gap? What else does that bullish fair value gap let us know? Two channel sponsorship step into the market. Right? That fair value gap lets us know that institutional sponsorship has stepped into the market. Right? Now that institutional sponsorship has stepped into the market, their job is to protect the anticipated move. What's the anticipated move? The anticipated move. Come here. The anticipated move, because of this institutional sponsorship, is to attack this high. This high. Why? Why is the anticipated move to attack this high? Because we came down here and took out these sell stops. We took those sell stops, took these sell stops. I think there might be two words. So these sell stops, and once you take when you take sell stops, you want to deliver them to buy stops. Where are the most buy stops laying right now? Above that high. Soaked up all of these sell stops and moved up. So the highest level of buy stops are above here. So that's why that's the anticipated move. Now that that's the anticipated move, what's the institutional sponsorship job? They have put a lot of money in the market, and now now they're pushing the market up. They want to offset their position. What's the institutional sponsorship? What do they supposed to do? They're supposed to protect this anticipated move. How do they do that? Right? With PD arrays that they leave behind to remind themselves where to go to offset. What's up, Seawalk? Where to go to offset and pick up additional longs. Why? Because they can't look at this. They were down here for a year. They can't just put on positions like we do. They have to they have to they have to layer in over time. So once they start to push the market up here, they don't have all their orders on right here. Right? They don't have all their orders on right here. So they push the market up, bring the market back down, and you have different PD arrays down here with different jobs to do. Right? You have a imbalance here, fair value gap. Right? We come back down to reprice into that fair value gap, offering sell side delivery, push back up out of it, come back down again, offer sell side delivery to the lower half of it, right? Come down into the propulsion block, also into the candle of the order block, hit the propulsion block and order block wick, push up a little bit. And now with this month, we've come down and we've touched the breaker and the order block. Right? This is the order block. Right? This is the breaker. I'm sorry. This is the breaker. This is the order block. Right? We came down, touched the breaker, order block. All of these have their individual jobs. We're not going to get into their jobs tonight. Breaker has job, order block has job, propulsion block has job, fair value gap has job, balance price range has job. All of these have a job. So now, boom, we get down here and they're doing their job. So the monthly had broken bullish. We were in a bullish pullback. What is a bullish retracement? What is a bullish pullback? It's a retracement back into a range. How do you know if the market wants to pull back into a range? Institutional sponsorship in the form of an imbalance. This institutional sponsorship, what is that? That's displacement on a higher time frame. Whatever your higher time frame is, it can be a monthly, it can be a daily, it can be a 4 hour, it can be a 1 hour, it can be an hour if you're a scalper, an intraday scalper. But it's displacement on a higher time frame, aggressive movement within the imbalance. That's how the market lets you know it wants to retrace back into a price range, back into a price leg, back into whatever you want to call this. Right? That's how it lets you know I want to go back into that range. Why do I want to go back? I want to go back and offer sell side for this Bessie. I want to go back down to this order block to offset some of the short positions that I'm still in when I manipulated the market down on this up close candle right here, which created a breaker. I want to get out of all the shorts that I'm still holding. So when I come back down to that breaker and order block, I'm getting out of those shorts, getting net long, because I got long here, right? Came back down, got some more longs here, came back down, got some more longs here. Every time I touch this area, I'm getting more longs and taking off my shorts at these key levels right here. So now the monthly has done its job. It's came back, it's retraced back into the area. Remember what we say price is going to do. It will consolidate, it will expand, it will retrace, and it will deliver. Or it will consolidate, it will expand, it will reverse, it will retrace, and it will deliver. Right? But in this case, we've broken bullish, we've expanded, we've retraced. Now we're waiting to see if we deliver. What are we waiting to see? If the lower time frames get on board, what do we say? The weekly was trying to get on board. Now, let's go down to the weekly. Let's go down to the weekly. Let's go. Let's go to the weekly. I should have brought it's not on the, all of them are not showing. Okay. Let's go weekly. Let's go. Let's go weekly. Let's go. Okay. So here's all our candles that we had. That was the imbalance was in there somewhere. The monthly imbalance was in here somewhere. Balance price range there. All of this translates over from the monthly time frame, right? Mm-hmm. Mm-hmm. Okay. So y'all know what all that is. Now, so on the weekly, we were talking about what the monthly did. So since the monthly did all that, let's look at how it looks on the weekly again. Right? So the weekly up here, we talked about the weekly. When the monthly started its bullish retracement, because the monthly showed you it wanted to come back into this area. How did it let you know it wanted to come back into this area? Because we had left a fair value gap down there once the institutional sponsorship stepped in, pushed the market up after leaving this balanced price range with the expansion and the displacement, getting a break in market structure, a bullish break in market structure, left the imbalance that let us know it wanted to come back in. Though on the weekly, we had clues to look at on the weekly clues that we had to look at to see if the weekly was in line with the monthly. We had a liquidity void here that we went back up into and left a little piece, right? We left a little piece of that liquidity void right there after we went back up the first time. So that little piece was left, right? Remember that? Yes, we do. So we had a weekly fair value gap also, right? Had this much of the fair value gap left right there. Okay. So once the monthly push up, got up here, did its thing, and started down on the weekly, we came down here, right? Here we go. Here we got a break in market structure right here. This low came above these highs right there, took out that low, breaking market structure. Another break right there, right there. That low also took out a high. So we had two breaks right here on this move down, right? Left an imbalance right there. Where's the imbalance? That imbalance lines up with this liquidity void. On the way up, we offered buy side delivery on the way up for that, reprice the imbalance. Sold off, offered sell side delivery, right? Offered sell side delivery, came in the next week, traded back up to the top of the imbalance right there, sold off, leaving it. Now that's a balanced price range, right? Came back up, poked into institutional order flow entry drill on that imbalance. How does the market let you know it wants to retrace back into a range? Y'all say it with me. When it has the displacement, it leaves an imbalance. That imbalance is a clue that, hey, I want to come back into that price range. Came back to the premium imbalance, institutional order flow entry drill, rejected off. That's letting you know it's exceedingly bearish. That lined up with the monthly time frame at this time because the monthly wanted to come back into this range. right here. There's a monthly fair value gap down here somewhere. I didn't mark it out, but it's here, right? That's why we had the arrow. Respect the imbalance, respect the imbalance, sell off, another break right there, took out another low, closed below it, imbalance. How does the market tell you it wants to come back into a range? It will leave an imbalance, right? Got down to the monthly once, the monthly twice, rejected off of the breaker, rejected off of the order block. All of this is on the monthly. We saw this on the monthly. This is what it looks like on the weekly. Also in this weekly, right? What did we do here? We came down to a weekly order block right there. Yes, we have weekly stuff down here that we could possibly come to. When we came to it the first time, we didn't feel it completely. We went into it once, reject, twice, reject, didn't feel it. We were showing exceeding bullishness at this point. That's a good thing when you wanted to run away from there. It's inside the balanced price range. This is the only imbalance right there. That volume imbalance right there. Yes, that volume imbalance right there. That weekly fair value gap right there. Yeah, all of that right there. And then we have a weekly liquidity void over here. Right, weekly liquidity void over here. Well, on the way up, we offered the buy side. On the way down, we offered sell side. Reprice the volume imbalance. Respect the liquidity void. Close right at the low of it. This week we came down into the weekly order block, which is also, y'all know what it was on the monthly time frame. Closed back inside the liquidity void. Respecting the liquidity void. The weekly is starting to respect the discount PD arrays. The monthly is starting to respect the discount PD arrays. All right. The weekly pulled back into a discount this week, closed inside the liquidity void, still respecting the discount PD arrays, fighting through this premium array, but it's still respecting the discount PD arrays. Now, this week we're in now, we opened up and we started to push up, right? We started to push up and we said, hey, this can either be an exceedingly bullish week or we can be setting up for a bearish week, which would not be, against it won't be no harm to the monthly if this turned out to be a bearish week, because we got weekly stuff that we can take care of. Namely, we got this new week opening gap there that we have not fully repriced into, right? We got weekly stuff we can take care of now. So the weekly is starting to respect discount PD arrays. The weekly does not break bullish until we get above this high, resting on the week of August 28th at 45.9750. That's when the weekly time frame breaks bullish. The daily time frame has already broken bullish. Now we're starting to consolidate. Right? Got a bullish breaking market structure right here. This high came down, took out a low at an area of anticipated reversal. We got a weekly order block, monthly order block, monthly breaker at a balanced price range. Right? And we're starting to reverse, got a breaking market structure, bullish. There's your imbalance. This is how does the market let you know it wants to retrace back into a range? It will leave an imbalance when that displacement is in there. If you don't see the imbalance, it's just expansion, right? It can expand forever, slowly, but on the higher time frame or any time frame, when the institutional sponsorship steps in, it's going to rear its beautiful head by having an exaggerated move in some kind of way and leaving an imbalance there. Looky, who stole the cookie? We have an imbalance right there. Where's the imbalance lining up on a daily? Right there with a weekly volume. I mean, yeah, liquidity void, right? We retrace back into that imbalance, back into the order block, back into the breaker, right? We got an order block, breaker, imbalance, all right there. Y'all remember that on the monthly? Order block, breaker, imbalance. Remember that on the monthly? Same thing on the daily now, right? And now we're just consolidating right here in this range. Right here, when we start consolidating, you don't want to try to guess anything. That's why I'm trading without a bias, because we've been here 1, 2, 3, 4, 5, 6, and now this will be the 7th day. We're starting the 7th day, right? So that's why I'm trading without a bias, and that's where we are now from the top down. That's my analysis from the top down for everybody who has not been present every night. I also noticed the volume imbalance is literally at equilibrium from beginning of the weekly buy model on March 17th. Market maker buy model on the weekly. Man, you looking at market maker buy models that high, Stacks? Man, Stacks looking at market maker buy models on the weekly chart. Well, you got a big microscope. You got a big microscope from March 7th, March 15th. Oh, that's May. Look at my calendar. Yeah, so March 3rd, it'll be March 13th for me. It'll be March 13th for me. Because the 7th, yours is on a Friday. Mine do it at the beginning of the week. Yours doing it at the end. So March. So from here, coming from here. Okay, so you're looking at it from here. So Stacks is looking at, let me see, make sure I'm on the right, if I'm on the same sheet of music with you here. So March 13th. So you're looking at this right here as being your market maker buy model right there. Possible market maker buy model right there. Correct. Yes. Yeah. All right. Yeah. Yes. So in the grand scheme of things, this right here, you would be correct on weekly time frame. If the market decides it wants to die off, like Michael is in the mindset of he's bullish on dollar. He's not calling the top on. He said, I'm not calling the top on dollar. I'm still bullish on dollar. As you look at my chart, I have a humongous weekly SIBI above price on the dollar. Right? It's a humongous weekly SIBI above price on the dollar. Right? So we've been coming up for like 13 weeks. I think we counted it off together. Let's count it again. 1, 2, I'm playing. I'm not gonna do that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, on the 12th one, we got a red candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. On the 12th one, we got a red candle. Right, so it went up for 12 weeks and started to pull back on the 12th week. Right now, we're just kind of this week. After this week is over, unless we break outside of this range, we're gonna have this is going to be like a 3-week consolidation, unless we just all of a sudden bust out of this range to the top or the bottom this week, which I don't really see happening. I ain't gonna hold you, but anything is possible. This would be like a 3-week consolidation here. Now we can just consolidate right here. We don't have to retrace. We can just consolidate and let price catch up and let everything get repriced in the market. Let the market, as they say on CNBC, let the market digest this move. We can just consolidate and let the market digest this move. We don't have to retrace. We don't have to take profits out of the market. We can just let it consolidate and let the market digest the move. Right. So if the dollar continues to push up into this imbalance, right? If it pushes up into this imbalance, which the market likes to reprice inefficiencies, that would lend to us coming down and completing this market maker sell model, right? Right here would be your low risk short. This right here would be your high probability short. In the market maker buy model and sell, I say it's buy model, market maker sell model. If I said buy model, I'm sorry. In the market maker sell model, this right here would be your high probability short. If you're in the mind frame of we're going to keep dumping, this right here is classic ICT market maker sell model, right? You go up. This is the smart money reversal. This is the low risk short. This is your high probability short. Classic market maker sell model. Right. Now, if you're in the mind frame of this balanced price range, if you in the mind frame of the market maker sell model started here, right? Now your sell model is complete. You don't always have to get the liquidity below the initial consolidation. You don't always have to get it, right? So if you're in the mind frame of the market maker sell model started at the balanced price range, your market maker sell model is complete. Now, myself, I'm in the mind frame of the market maker sell model started here. Why? Because this is the weekly time frame, and on the monthly time frame, this is where the institutional sponsorship started. So on the higher time frame, the institutional sponsorship started here at the balanced price range and took off. So on the weekly, when you look for the market maker sell model and buy models on the lower time frame, I look for where the institutional sponsorship started on the higher time frame. At most, since it started here, I'm willing to give it from it. Like, still, this can be a high probability short. I'm willing to give it to below the original consolidation. Why am I willing to give it to below that original consolidation? Because we still have an imbalance that we have not finished. Right there, you got a fair value gap and a volume imbalance right there that we have not taken care of on the daily, right there at the original consolidation. So this right here can still be a high probability short that takes us back down to there. What will negate that high probability short? If the monthly and the daily are strong enough to push us through this SIBI. What lines up? What narrative helps that out? The seasonality that we're going into. We're almost done with October, right? October is almost done. We've gotten through the 2 worst months of the year. We got a positive year thus far. I'm pretty sure we do. Yes, we do. We got a positive year thus far. See, right? This year we're positive thus far. Typically, historically, when the market is doing good, it tends to end the year good, right? You're doing good. Quarter one, quarter two, quarter three is just iffy. We tend to end good. Right? Quarter one, quarter two, quarter three. Here we go right here. Quarter four has started. We came up, tracing back. Right? Right. Came up, retracing back. This quarter here, we can push up, end it positive. We ain't even got to make a new high to make it be a positive quarter. But if we get a strong Santa Claus rally, make a new high, wow, how great would that be for the market? Now, let me update my charts now. Now that I've brought everybody up to speed. Stacks, thanks for asking that question. Now that I brought everybody up to speed on my narrative and why I'm looking at the market the way I'm looking at it, why I'm trading without a bias right now. If you have any questions, keep them to yourself. Nah, but seriously, if you got any questions, ask away. I'm about to get into updating my chart. As you see, we're still in this area that we spoke about that we may consolidate in. If you all have been like right along with me with the analysis on based off the stuff that I've been seeing, if you've been understanding, if you've been seeing it the exact same way, pat yourself on the back. You see it playing out in real time over days and weeks and months. Like, we hey gang, just randomly came on to cram in started time before bed, and y'all are here again. Are there notifications being sent for these late night sessions? I don't know. Ask Jeff Bezos. I don't know if they do. Do y'all get y'all our notifications coming out to y'all? I don't know. So it's like E-Rock, you know what it is? Like when I be doing these late night sessions like this, a lot of times I be doing it like within 5 or 10 minutes. So it may take time for like if I do it, if I do it, if I cause I'm doing it like like spur of the moment. It's like I'm doing all of my super dad duties and husband duties and everything, and then it's like I'm coming in here, I'm sneaking away late night so that this don't take away no time from my family. So it's like spur of the moment, and maybe that's like the delay because I know a lot of times I don't get notifications like right then. I might get it like 30 minutes later, 10 minutes later, 15 minutes later. You know what I'm saying? But that's might be what's happening, the reason why you're not seeing it. But if I do it like if I'm gonna schedule something and I'm gonna do it like 3-4 hours later, then the notifications go out in plenty of time, and then oh, it's gonna be on at 7 o'clock tonight. You know what I'm saying? But this spur of the moment stuff, that might be why you missing the notifications. I got notification, but I also have YouTube up in the browser. So oh yeah, if it be open, it pop up. Yeah, if you got it open, it pop up. Get your mind out the gutter, my sweetie on a work trip. Like, look at God. Oh, somebody mama should have bought a Honda. Anyway, man, y'all got me all over the place. What's the day? Wait a minute. How did it get? Did I put that there already? Oh yeah, I did. I had started and then I stopped and I went back. I'm sorry. I started and I stopped and I went back. Okay, so we still have a weekly. Yes, we still have a weekly SIBI above price. Right? Weekly SIBI above price. As we said, when this week closed, I think it might have been on Sunday. When this week closed, we said we had a weekly SIBI above price, no monthly imbalance below price. So there's no higher time frame imbalance below price. So we were saying that this weekly could draw price up to it, right? It could draw price up to it. Thus far, that has been playing out. Price has been drawing up to it. We got very close. This because we went into it last week. We pushed into it last week, got very near consequent encroachment, came into this order block right here, came to this bearish order block and rejected off. Now, for 2 days, we've closed above consequent encroachment of this wick, right? And I said you can look at it as, if in none in low resistance liquidity run environments, a daily closure above this consequent encroachment will put me in the mindset of we're going to attack that high and get into that imbalance relatively quickly. But since we're in the high resistance liquidity run environment, we said we may just stay in this area for a little while, right? And that's when price was here. So price was here. And we said, hey, we may stay in this area for a little while. So Monday, Tuesday, we no, price was price. What was price at? What was price at? What was so 13th right there? Yeah, price was here. Yes, price was here. Price wasn't there. That's the prior Friday. This Friday. Okay. Price was here when we said that. We had just come back into this area, right? Into that there. And we said we can maybe hang out in this area for a while and consolidate based off what we were seeing on the dollar. We said the dollar may hang out here for a little while. Let me go to dailies on the dollar. We spoke about how the dollar 13 right here. We said the dollar may hang out in this area for a little while, and this may hang out in this area for a little while. And here we are. We've been hanging out in this area for a little while. All right. Don't have any crystal balls. We just watch price, use the tools that we've learned, and make our educated decisions on the levels that we're watching to later execute on our trades, right? And since I'm trading without a bias, I'm just using the levels that we point out each day to see if it lines up with the time with the session that I'm trading to find a trade. On Monday, found a trade in the afternoon based off the levels we was looking at. On Tuesday, there was a London setup that I wasn't a part of because I wasn't up to trade the London, and then found a short today based off of Tuesday. On Tuesday, found a short on Tuesday today based off of levels that we was watching. What will Wednesday bring? I don't know. But we will have our levels and we will watch. You say, Tim, what do you mean by the levels and then the session? Glad you asked that question. Okay. Here we are. We got a long wick to the top. We got a long wick to the bottom. With the benefit of doing it late at night. What's up, Sanjay? With the benefit of doing it late at night, we see that we have opened down. So which wick are we paying attention to right now? The lower wick, right? We're paying attention to the lower wick right now. Why? Because with the benefit of being in the live market, we see that we have opened down. So now, what do we expect out of this lower wick? What did I say? I look at the wick. I treat the wicks like bissies and sibbies, right? I treat the lower wicks as bissies, the upper wicks as sibbies. Why? Because the lower wicks are below it, and when price comes down, right, this consequent encroachment, I'm anticipating it to support price. When you come down into a bissy, you anticipate it to support price, right? With a sibby, when you go back up into a sibby, you anticipate it to resist price. So when you go back up into a premium wick, I expect it to resist price. Why? Because I sell in a premium and I buy in a discount. So if it come to the discount wick, this is the opportunity to buy, right? That's why I look at it like that. Consequent encroachment of the wick. And plus, Michael says wicks, he called the wicks imbalances, right? So coming down, watching if we get down to that consequent encroachment of 43.83, want to see how price reacts when it gets there. Am I going to just buy it when it hit that? No, I'm not. Why am I not going to just buy it if it hits that? Because it's not inside the same session. This is something that has been done and price is coming back to it. So I need price to show me what it wants to do with that PD array. If it was in the same session, aka current, what's up? If it was in the same session, aka current price action, then yes, if that's something that if it's a part of current, if it's a PD array part of current price action, meaning we just got displacement and we're retracing back to a PD array, then yes, I buy it or sell it when it comes back to it if it's in current price action. But since this is not current price action, I need price to show me what it wants to do when it gets to that PD array. Hopefully I was clear on that. And then as you see, Monday and Tuesday, they go to 2 days I was talking about where we closed above this premium wick, right? So closing above, let's look at this right here. You can also grade consolidations too, right? So let's look at this consolidation from the highest body to the lowest body. You can do it from wick to wick if you want, but since these are daily candles, right, I want to look at the beef of the move, right? Bodies tell the story, wicks do the damage, right? Hide all this other stuff real quick. No, not that. That. Okay. So bodies tell the story, wicks do the damage. Right now, that's consequent encroachment of the consolidation. Here we are on Monday. We moved into a premium of the consolidation. All right, let's do this right here. So give me a box. I'm going to make the premium red. I'm going to make the premium red. Right, and I'm going to show the equilibrium of the premium. No. Then I'm going to copy this. Oh, come on. I'm going to copy this. Then I'm going to make the discount green. Make the discount green. Show the equilibrium of both. So on Monday, we came up into the premium of the consolidation and closed in the premium of the premium. All right. On Tuesday, we went all the way down into a discount of the discount and pushed back up and closed in the discount of the premium, right? Closed in premium. We went to a discount, deep discount, because we went to the discount of the discount, came back up, closed out in the premium, close to equilibrium of the premium. Right? We also poked outside of the body area. We poked outside of it. Right? Went up, got above these um, body highs right there, poked up there into Neverland. I can breathe. Right? Didn't quite get to the cunts of that. Maybe we did. Maybe we did 44, 24, 25. We went up to 44, 23, 25. 1 point away from the cunts. Right? But we're still messing around in the premium of the consolidation for 2 days. Now, thus far, we've opened up and we've come down. It's 85, 25. The low on the counter is 86 from the equilibrium of the consolidation thus far on this candle. Came down 3 ticks away from the equilibrium of the consolidation from body to body. Right. Let's look at it from wick to wick. If just in case somebody here be like, I used wicks. What about us that use the wicks? Your charts and mark it out then. How about that? So it's 85.75 from wick to wick, and body to body, it's 85.25. So there's 3 now. You wick to wick. Ooh, let's see, wick to wick, 85.75, and this right here, we came down to 86. So it's 1 tick away from wick to wick equilibrium. Right, we came down to 1 tick away from equilibrium for wick to wick. So there you go, wick to wick, people. So that's what we are. That's far inside the consolidation, right? Inside the consolidation, we're messing around in the premium of the consolidation, right? Inching more and more toward the premium. We have spent more time. We were in the premium there, pushed down to the discount, quickly went back to the premium, in the premium, and now let's see if today stays in the premium or slides down to the discount. We've spent more time in the premium than in the discount on this consolidation. Now, let's move on, shall we? Body to body, body to body. Nothing else I want to change on the daily. Going to leave that there. We have the we got a daily imbalance above price 2 that we didn't finish. We pushed up to like 3/4 of the way, same way we did. The weekly we did like halfway. The daily we did like 3/4 of this SIBI. So fighting to get back to the top of that. Like we say, daily had a bullish break in market structure, retrace back into the area, hit the discount PD array, respecting it and pushing up. Right. Since we respecting this discount PD array for the daily, the draw will be up there. Do we have to hit that draw? No, we don't. We have come up to a rejection block, push back down, but we're still fighting. Let's see if we want this. We've had 2 daily closures above the weekly premium wick, so it's still looking good for taking that high. Let's see if we get it, or if we just lose ourselves and slide away. Tomorrow is Wednesday, right? Tomorrow is Wednesday. Monday came up, Tuesday set a high. Now we're on Wednesday. We've made a high on Tuesday. Let's see if this plays out to be a bearish week where we make the weekly high on Tuesday. We came very close to that high. Like I say, you don't have to get there. We've just hit a rejection block. That is a premium PD array. Price opened up, moved up to a premium PD array, made a weekly high on Tuesday. Now, let the price show you what it wants. Will we continue to draw toward the weekly and the daily imbalance, or will we give up the ghost and have a bearish week and come back down and take care of that 4 hour imbalance that we left behind right there. Remember, 4 hour imbalance that we left, but that little piece we left behind. Will we come back for that? The 4 hours consolidating to the 4 hours consolidating to Monday. So this is okay right here. So we started out Monday, and then on Monday we got a 4 hour closure above that. Then came back on Tuesday, got a closure below, closure slightly below, then a closure above, and now we're working on this closure right here, right? So like I say, on the lower time frames, you can see them wiggle and dance all around these areas, right? The lower the time frame go, the more dancing you're going to see, because that's a weekly level. But we've been hovering right there around that weekly level. As you see on the 4 hour, everything's been consolidated right there around that same level, right there at that, what is that? 43.91. Yes, 43.91. Everything's been consolidating around that 43.91 right there. And speaking of consolidating, right, if the bullishness is to continue, you can take your 10 minutis, right? Come from when price took off, come up there, put your 10 minutis right at equilibrium, right there, and see where you anticipate it most likely going, right? Reaching all the way above this consolidation right there. And let's just say if this is a market maker buy model that we're in on this 4 hour, right? Let's draw this out. We're going to go from this original consolidation. Come here like this. All right. To the original consolidation right there. To that imbalance right there. That's where we went with the 10 minutis. Okay. Now, let's go higher and see if this is a valid market maker buy model. What is this? 4 hour candles. Let's go to a daily chart. Right. Going to a daily chart. Look at that. That 4 hour market maker buy model is inside a daily price range, right? We got, you can look at this swing high. You can look at this swing. Is that a swing high right there? It's not really a swing high. So look at this swing high, right? So you got a daily swing high from here. You got a daily swing high from there, all the way down to there, right? That's your price range. Look at that. Look at that. Look at where the equilibrium is on that price leg. From that high to that low, equilibrium is right there. And look at where it's consolidating at in reference to when we ran the 10 minuti. Is this magic? How did that happen? It's not magic. It's just called reading the price delivery. Will it just take off up there? No, it won't. Can it chop around? Yes, it can. Can it still pull back and do some stuff to the lower end? Yes, it can, because you always want to have points that negate if it's this and this and such and such. Right? And if you look at this right, he'd be like, oh, that look like it's 1 billion right there. What you do, you go to a higher time frame and see if this is forming inside of a price leg on the higher time frame. Go from the high to the low on a higher time frame and see if that, see right there what I drew out on the 4 hour. See how I drew this out on the 4 hour right there? Where is it? Inside a daily price leg. So that gives credence or validation or whatever you want to call it to this 4 hour market maker buy model right there. Because where do you look for market maker buy models and sell models? You look for them inside of price legs. So whatever price leg you're looking at on that time frame, you go to a lower time frame and look to see if you see a market maker buy model or sell model forming. Oh man, when I be up at night in the wee hours in the morning, man, I be running my mouth. I don't know about y'all, but boy, look at here. This stuff right here would have been golden for me to have somebody just sitting there just running their mouth about stuff like this for the free 99. Shout out Wall Street Trapper. He be like, somebody on the internet charge you $19.95 for this right here, right now. Not $19.95, $1,995. Somebody charging you $19.95 for this stuff right now out there on Al Gore's internet. And you paying for it because you think the more it costs, the more value you get. And then you have people like little Timmy Rogers out here just giving up the goods for free, giving you all the milk you want for free, and you're going out there and buying somebody else's cow. You're out there just buying somebody else's cow, and I'm giving you all the milk you want for free. Stomp down, baby, and let your daddy see. Skinny back and milk it down. My little brother still here. If my little brother still here, skinny back and what you know about that skinny back and milk it down? What you know about that stomp down, baby? Stomp down, baby, and let your daddy see. Oh, look at my nephew with the peacock bass. I just noticed that's him with the peacock bass. I taught my nephew how to fish because my little brother don't know nothing about no fishing. I'm lying. My little brother, he a little angler. I don't know. I don't know. I lost my touch. My daddy tried to teach us how to fish when we was younger, but when I go to Florida, I could catch fish. But up here in Georgia, I can't catch. I guess I just don't know how to fish for the bass and the crappies up. Like in Florida, peacock bass eat anything. You catch a peacock bass with a fake hot dog. Peacock bass eat anything. But like up here, these crappies and these crappies and these brims, them brim, they call them bluegills, I think. Man, when I was in Florida, you can catch brims with bread. You catch fish with hot dogs. You catch fish with anything in Florida. But up here, man, them things so picky. You got to have the right size. You got to have the right size bait, right color bait, right. You got to have a jig. You got to have it rigged properly, or they won't touch it. You either gonna have a Texas jig or top weighted, or you got to, man, these fish so picky up here, man. They so picky up here. Anyway, I done got on fish. I think I'm tired of talking about price, man. Hopefully I was able to help somebody, man. If I didn't help somebody, I jalapies. I already gave my analysis on what I'm thinking, what I'm looking at. If you learned anything from it, if I help you with anything from it, go back and look at price and see what it's offering. See what you got going on. Right. We got this imbalance that we didn't finish filling, right? We came down to an area of anticipated support. Why? Because we went up, had a bullish breaking market structure there, right? Market left imbalance there, we hit that one immediately, right? This one here, we came back and got it later, hit this order block.
I love Spider Game.
What's up, son? Hit this order block, ricocheted off of it, right? Took off, displacement, breaking market structure, back bullish, right? Retrace back down, that imbalance. This imbalance did not fill completely, right? That can either be exceedingly bullish, right? Or we can come back and get him. Now, this would be an area you would want to watch right here. See how price reacts if it comes back down to that low right there. Thus far, that's the Asian low, right? You got an Asian low right there. If price wants to come back to that, you want to see how price reacts when it gets there. Do we break it and take this imbalance, then reverse, right? Because we take that low, what's the imbalance below it? This one here, right? Then you got the order block. So if you attack that low, you anticipate it taking out this imbalance and touching the order block, right? If then you got a volume imbalance above price right there, and you got a fair value gap that wasn't finished, wasn't completely repriced to. Now, this fair value gap right here, in my mind, is holding less weight than this one. This one right here is holding less weight than this one. Why do I say that? Because this displacement was made on a retracement, right? This is a retracement when this displacement was made. So it was a break in market structure, bullish, and then this is a retracement. So I'm anticipating this one to fail, right? I know you look and say, hey, Tim, we went into it and it pushed price back down. True, it did. But since we broke bullish, right, I'm anticipating to take care of the imbalances and then go back up. But since we're in these high resistance times, price is not just moving fluent, right? We broke bullish, came back down, didn't finish the imbalance, pushed back up, and just started consolidating right here, right? We're just consolidating. We're not doing anything. Push back up. This right here is. You all right, son? Chris, you good? This right here is the Asian session. So we're just chopping around in there. Went down, up, down, up. Didn't really do much in New York, but go up and down and then close in the exact same place we closed at on Monday. So price has been doing a whole bunch of nothing. Right. But that's the sell side I'm watching. If we decide to come back to it, that's what I want to. Hey. Whoa, look at that. I put that almost in the exact spot. That midnight open. I just brought it over and I put it right there at that 43.95.75. And then look at there. Look where let me unlock it. Look where it opened up at 43.96. I had it at 43.95.75 and it opened up at 96. I sat it like one tick away from where the actual midnight price opened up. Now, ain't that a gizzard's blizzard? Okay, so this buy side right here from right after the close, just like the last hour of trading, watching that. If we get up to that high, if price wants to attack that high, want to see how price reacts when it get there, right? What we got going on with that high. We have the rest of this SIBI. Let me get this the right color. It's 1 hour right now. So we got the rest of this SIBI that we did not reprice through. And then down here, we got the rest of this BISI that we did not finish repricing to below price. Okay. So when we closed out the day, price was in a retracement, right? Price had retraced and bounced off of it, blah, 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 bounced up off of it, right? Then the Asian opened up and we pushed down and did not take out the swing low. Came all the way down here and did not take out the swing low. Pretty much roughly respecting the body of that order block, right? The potential order block, right? We don't have any fair value gap. That's why I say potential order block is right now. It's just a down close candle. It took off. So on the hourly, right, we don't have an imbalance in this price leg right here. So it's potential order block. But since we moved up so far, I'm pretty sure it's an imbalance on lower time frames. Let's look and see what we got. Got to see what hourly candle that was. That was the 3 o'clock candle. So at 3 o'clock, nope, no imbalance on the 15-minute. Right, no imbalance on the 15-minute pushing up at all. Right, 3 o'clock. Got an imbalance on the 5-minute right there. Pushed up, came back to it, pushed up again, hit that imbalance. Then we broke lower, came back down, stopped, boop, right there at the 5-minute order block. Right there. There you go. That's what stopped you right there. The 5-minute order block right there. Right. Right here. We didn't finish. We did not finish this. What is this right here? Why do I have that there? Oh, that's that volume imbalance. That's that volume imbalance right there. Okay, so that's what stop price right there. We did not. I'm gonna take this. God dog it. Is that locked? What's going on? No, it's not locked. Okay. So we got this BISI right here that we did not finish filling right here. So we set a BISI on a 305 candle, right? We pushed up, had to break in market structure, and we did not finish filling it when we retraced back and we took off and got that break, right? So now in the Asian, we opened up, we came back down, repriced that BISI, right? And then we came down to where? The order block, right? That order block right there is when the institutional sponsorship stepped in, right? See what was coming down. Institutional sponsorship stepped in because we blast off. There's your imbalance. There's your imbalance, right? Displacement, right? We came back down to the imbalance that we didn't feel. And where did price stop? Right there at the 5-minute order block. 5-minute order block. Once we got to the 5-minute order block, we got a break in market structure right here, right? Came back down. Just assuming some lower time frame imbalances down here, down here, right? We came to a down close candle there, but we don't have any imbalance on this one right here. Probably got some imbalances on the lower time frame, but we came back down into that price is respecting what, right? We don't have an imbalance right here, but these bodies of these candles are respecting what? This imbalance over here that we've just repriced, right? Off buy side, sell side, buy side, sell side, buy side, sell side. We're respecting that imbalance right there. What do we get? Displacement up. So now here we are. We've come back into this imbalance right there. Now we have an order block right here. You will really want to see if price start to come down, right? If price started to come down before it went up and took out this buy side right here, you would really want to see this imbalance at this 955 candle and this order block right here, support price. You will want to see this fair value gap right there that we repriced. Now there's a balanced price range. You will want to see that support price Why? Because this is where the institutional sponsorship stepped in on this leg right here. So you will want to see a support price. If you lost that and attack that sell side, right? If you attack that sell side without a huge rejection, now if it came down here, hit that sell side, and then wick back up and closed inside there, that's all fine. Just a stop run. But you want to see it act as support. You don't want to see price come down here and start closing below this. That's what I mean when I say support it. You don't want to see close. You want the bodies to tell the story. You don't want a closure below that right there if this bullishness is to continue. Okay. That's it. It's very late. I'm very tired. I need to take a shower. Haven't done that. If I helped you out in any way, I done my job. If I didn't help you out, I'll try my hardest again next time. That's all I got, man. Anybody got anything for me? Anybody got anything for me before we go? I'll give it 15 seconds. It's a 15-second delay. Type fast. I don't know what that is. It just came out as 3 little squares. What you say? Oh, high time frame analysis is sinking in. That's what's up. That's why I do this, to help somebody get their aha moment. You're very welcome, E-Rock. All right. I appreciate y'all, man. That's all I got. If I decide to jump on again tomorrow, I'll do so. Once I start doing something like this right here, I tend to keep going because this is trading right here. This is trading. Trading ain't just buying and selling. Trading is sitting down, analyzing the market, saying, hey, if price do this, this is what I'm going to do. Hey, if price do that, this is what I'm going to do. This is what I see price doing. This is highly probable to me. Are you going to get it right every time? No. Are you going to get it wrong every time? No. But you just have to learn to trust your analysis. And the more you do it, the more you see it, and be like, hey, I can't do this. I can't do this. I appreciate you, Sasha. I salute every one of y'all with both hands. Till the next time I decide to jump on Alec or his internet, y'all take it easy, man. Enjoy the rest of your night. Sorry for keeping me up so late. Y'all be safe out here in these trading streets. Big Spider gone.